welcome back. You're watching Indian Open right here on Bloomberg Quint Live. Asia as a pocket is doing fine. The rest of the world is doing fine. About a 0.5% plus on Japan, China and Hong Kong, all of them trading in the green this morning. SGX Nifty rubbing off from that. A marginal 2-point gain though, nothing really much to talk about, at least from the SGX standpoint. But yesterday's session was a washout, Neeraj. I mean, despite Reliance Industry having such a spectacular day, a day that we've not seen in almost 2 years, the market mood itself, was just not comparable.
Yeah. Resistance at 200-day moving average, and Reliance found resistance at 1300. And well, what if Reliance doesn't participate today? And then what happens? Despite the world looking okay, the SGX Nifty, as we speak, has already shifted into the red territory.
And it's a truncated week. We've had 2 holidays.
That too.
And we saw that big reaction on the currency yesterday after, the holiday that we'd seen on Monday's session. So literally, Friday's close was 70.80. And yesterday's close was 71.40. So almost like,
Yeah, currency is depreciating, yields are hardening, so all of that.
Yeah, all of those factors. Too many things at play right now, even from an equity market standpoint. But we'll talk about all of that with our experts as they join us. But also important to see, since tomorrow is a holiday, the weekly expiry gets shifted to today. So the last half an hour of trade is going to be an interesting one. Navneet is going to join in right now to talk us through the setup for the F&O space. Navneet, good morning.
Good morning to both of you. Well, the cues are not looking that great after a sharp sell-off seen in yesterday's session. In fact, SGX Nifty 2 has come off from that highs of 30 points that we had seen a while back. So for the futures, we closed at a discount after many days. So that's not a positive sign, though there were not fresh shorts being built up there. The open interest was down nearly 1%. For Bank Nifty, now that's the space which has been underperforming even for this series so far. Bank Nifty has seen cuts of about 3 to 4%. So fresh short positions seen on Bank Nifty. Open interest was up about 7%, and the index also fell by about 2.5%. You had the markets falling by about 1.5%, and India volatility index surged it surged sharply to 17.7 levels, and the high spike was almost 12%. The PCR, which is very closely monitored by traders, that fell to level of below 1 to 0.96, and that was a function of more of short positions being taken on the option side. Of course, both Nifty as well as Bank Nifty options will be expiring yesterday, but this is the distribution for today's expiry. Maximum open interest is now at the 11,100 strike, and on the put side it has shifted lower to 10,900. What's the range on the downside? Probably watch out for the recent low of 10,782, which was seen on August 5th. But yesterday there was a lot of call riding in the system. 11,100 and the 11,000 strike added a lot of open interest, and put writers ran for cover as the markets went lower. 11,000, 11,100 strikes did see unwinding in trade. In terms of stock futures, which stocks to keep an eye on, long position seen for Indiabulls Housing Finance. Second straight day of gains of between 10 to 13% seen here. Reliance saw cash-based buying because on the futures side there was short covering seen. Open interest declined here, and Sun Pharma, after the numbers went up 4%, long position seen here. And the first stock to enter into the ban in this series is Dewan Housing, so watch out for this one. This was down by over 3 to 3.5%. The FI sold almost 600 crore on the cash side. Nothing to take home when it comes to index futures. They still remain net short, but it was the index option side where a lot of short positions were seen in yesterday's trade ahead of the weekly options expiry. So you had positions coming in on the put long side as well as the put short, the call short side. As you can see, 14,465 contracts added here, and even on the call side, nearly call short side, 8,500 contracts were added. With that, it's back to you.
All right, Navneet, thanks a lot for that. So we'll watch out for that. And I think I'm going to pick up a stock there that Navneet spoke about, and Sun Pharma reported its numbers yesterday, and the stock surged. It showed an uptick after the drug maker reported a good set of numbers in the first quarter. The company is also sticking to its sales guidance for the current financial year. Darshan Mehta is here to take us through the highlights of the conference call and what brokerages made of it. Darshan.
Yeah, so Devina, yesterday we discussed the numbers, but some bit of internals that we need to point out, and that also came in the conference call. First of all, the point is that the India business grew in line with estimates, but the other markets managed to disappoint. So US emerging markets, that was something that was slightly disappointing. The R&D cost was also lower this time around. There was forex gain, that the tax was much lower than anticipated. So all this aided the margins as well as bottom line for the company. The rest of the world was aided by the consolidation of Pola Pharma in Japan, and PAT was aided by forex gain and lower tax. Now, some bit of positive news that came in the conference call. First of all, management has maintained its guidance, low to middle double-digit sales guidance for FY20. So that's the first positive that came out. They've started disclosing the numbers that are coming out from their specialty portfolio. So $94 million is the first quarter number that came out for the specialty sales. So that is positive. The transition from or the translation of Aditya Medisales distribution business has been completed now. So their sales will be normalized much more, and they're working to reduce the working capital days. So these are the positives that came out. On the negative side, there was this one-off that aided performance, $70 to $80 million one-time supply contract, and that was something that aided the US business. Secondly, they're saying that they expect to incur higher R&D costs this time around, which will actually dent margins going ahead. Tax rate will progressively rise now from a single digit, and the street was anticipating a double-digit 15-16% tax rate. It came in at 8%. And finally, the gross margin product was down on product mix across geographies and the India distribution business. Couple of brokerages that have come out with reports. JP Morgan is saying that the specialty investment will cap a margin over the next 1 year. Edelweiss is saying that they believe that the medium term earnings growth will be challenging for the company. They believe that the specialty ramp up has been slower than expected, and Morgan Stanley is saying that the positive operating leverage should help earnings, and global specialty business should also gain traction going ahead.
All right, Darshan, thanks very much for that. And we saw the reaction of Sun Pharma in yesterday's session as soon as it reported those numbers, and the stock was up a good 4% Yogesh Mehta, founder of Yield Maximisers, joins us right now on the show. Yogesh, thanks very much for taking out the time. I want to start off first with Sun Pharma and what you made out of the numbers. Obviously, last quarter the overhang was of Aditya Medisales. That's out of the way now. Operationally, they're doing well. US business has been picking up, and they have been gradually and steadily aiding margins as well. What's your take on Sun Pharma and whether or not you should be in the stock?
Devina, I would say the numbers are almost in line with expectation, and as the management has clarified earlier also with the Aditya Medisales, which they have done from the April 2019 onwards, this financial year. So almost on the compliance side, whatever steps they could have taken, they have done that as a very transparent manner. On the numbers side, I would say that domestic businesses are just 25-27%, but US markets are doing well, and one or two more launches for the US market is scheduled for the second and the third quarter, so maybe this month or the next quarter. So that will impact a little bit on the spending side, but of course the top line number that will contribute a little bit. Overall, I would say the numbers which have shown is because of the lower tax outgo, and the overall top line number are in line with expectation. I was expecting there would be a forex loss would be there this time, but somehow it has come as only 67 to 70 crores out of the overall top line. I would say numbers are very much in line with expectation, and generally YOY Q1 numbers are always very much stable and good, wherein Q2 and Q3 numbers, Q2 and Q4 numbers are always a little bit of sluggish. At 21 times forward 2021 EPS, I would say that it is fairly valued, though we may not I may not rule out that probably this could show some fireworks today, but then also I would say 450, 460 is the level where it will be fairly valued overall on the forward earnings.
Yogesh, two stocks, both very volatile, divergent moves yesterday. Indiabulls Housing Finance up 13-14%. Yes Bank down about 10%. Would you take an informed call on either of these two names, or would you leave them alone?
Good morning, Neeraj. For Indiabulls Housing, I would say the management has clarified and they've shown their interest for the takeover on the management control. So that has given some kind of a positive sentiment for the stock. I would say that the cash in the balance sheet is very much there in 25,000 odd crores, and the loan book is 1.08 to 1.1 lakh crore. So I would say that yes, definitely at around 500, 550 level, or closing is around 580. I would say around the yesterday move, if I eliminate, then around 500, 550, I would be comfortable buying, but not for the long term, because NBFCs are getting into this bizarre. So around those level, I would be buying, but not for the long term at this point in time. The other one is we are talking about Yes Bank now. So Yes Bank, the QIP price will come to know today. And earlier conversation also, I mentioned that it is not like the company which will go like DHFL way. So I would say that all the negatives are priced in right now. And if nothing more comes out in terms of asset quality deterioration out earlier as ADAG Group and others, so around 75 or around 75 to 90 level, I would be comfortable buying those, buying Yes Bank.
Okay, stay on, Yogesh. Much more to talk about. Lots of results, lots of stocks in news, some nifty names that have come out with numbers as well. So let's go across to our research team to try and talk about some of those. A lot of which would actually react in the session today as well. Darshan, of course, Johnson again. Then Agam talks about some key earnings and some about the large nifty names that came out with the results. Maybe start off with that one, ONGC, and how did it stand out?
Well, compared to last quarter, if you see, the numbers were pretty much in line with what analysts were also expecting. And so if you see the headline numbers, the revenues were down marginally by around 0.8% to close to 26,500 crore rupees. The net profit was higher by nearly 46%. EBITDA saw a jump of nearly 22%, while the EBITDA margins came in higher at 56.9%. On the operation side, if you see, the net realizations were higher at around $66.3 per barrel, while the gas realizations were higher at around $3.69 per million British thermal unit. And that was because of higher crude oil and gas prices in this quarter. On the volume side, if you see, the crude sales volume were down by nearly 10%, while the gas sales volume were down by nearly 4%. Now, because of this downtick in volumes, the revenues of the company were down marginally by nearly 1%. Now, the factors that aided ONGC's financials in the first quarter, well, it was a sharp drop in the cost that we had seen in the first quarter, because of which the company reported a inline set of numbers. But however, some of these positives were offset by lower sales volume, higher finance cost, higher tax rate, and a lower other income in this quarter compared to last quarter. Now, employee cost, exploration cost write-off, other expenses and statutory cost decline in the range of around 13 to 36%, thereby aiding the numbers. However, on the flip side, if you see the other income, now that was down by nearly 67% to close to 750 crore rupees because of an absence of dividend income in this quarter. Along with that, the finance cost of the company, that was higher by nearly 21%, while the tax rate in this quarter was higher at 35% compared to 27.5% in the previous quarter. On the segmental side, if you see, the crude sales volume or crude sales revenue were down by nearly 5% because of a 10% downtick that we had seen in volumes, while the gas sales volume were higher by nearly 1.2% because of higher gas realizations that the company saw in the first quarter of financial year 2020.
So what's the verdict, net, and what are brokerages saying? What will the stock do?
Well, brokerages have maintained their stance on the stock, and they have cut their target price, but that is on the back of the sharp drop in crude prices that we have recently seen. They are also saying that the numbers are pretty much in line with what they were expecting for ONGC.
Okay, we'll try and talk to Yogesh about this. Thanks so much for that, Amit. Okay, let's stick to results first and then get to the stocks and news. Agam, what about the other results?
Sure. So we have Coal India, which is the other big one. And again, results were above expectations. We've had higher FSA realizations and stable employee costs drive profits higher. FSA realizations were higher owing to higher FSA contracts for non-regulated players. Moving on to United Breweries, this is where results were below expectations. We're looking at volumes growth around 5% against expectation of 6%. And again, the volumes growth has been impacted by restricted supplies and production as per the management. Moving on to National Aluminium, that's NALCO, results were below expectations. Financials were impacted by weak performance in the chemical segment, which actually saw a decline of as much as 39%, and net profits consequently declined by as much as 86%. And Glenmark Pharma, where results were once again below expectations. There was weakness in US, LATAM, and rest of the world sales which impacted top line. And there was also higher raw materials costs, which impacted margins. On the whole, disappointing earnings for Glenmark Pharma too.
Okay, I think we'll probably see some of these stocks react. Darshan has already spoken about Sun Pharma and the commentary. Glenmark numbers and then Dr. Reddy's is in news as well. Speaking of stocks in news, Darshan, what's standing out?
Yeah, so we'll start with Dr. Reddy's, in which they've received a complete response letter from the US FDA for their key drug Nuvaring, which means that there will be another 8 to 10 months delay for this drug to come in. And if competition comes in before Dr. Reddy's and takes this drug, the market share that they will get will be negligible. So this is a big drug, $800 billion drug that they're betting on. So that's important. GAIL will be in focus. PNGRB has increased tariff for the company's Dabhol-Bangalore pipeline by 11%. No doubt it's coming slightly below than what the street was anticipating. Hdfc Life, Standard Life is looking to sell $350 million of shares, anywhere between 477.8 to 493 per share. Syntex is saying that they're looking to sell land and factory building at its Kalol plant and use the proceeds for debt reduction. The counter has been hammered out of shape of late. A couple of bulk deals. Khadim India, the promoter, has acquired 1 lakh shares. Gulf Oil Lubricants, a small cap world fund, has sold in 2.6 lakh shares, and Amansa Holding has acquired 6 lakh shares, or close to 1%, in Sudarshan Chemicals, and it's not the first time. I think he's bought in earlier also, so that stock will be in focus today.
Interesting set of names. Thanks all of you for giving us those perspectives. We'll talk about some results as well, but Yogesh, since we are talking about pharma companies, the Nuvaring delay for Dr. Reddy's, do you look at Dr. Reddy's closely, and if so, what have you made of this?
Neeraj, Dr. Reddy, earlier also I mentioned about the eve of result that the US business and the generic the markets are showing a lesser of a margin cut. That will drive to the lower profitability for all these companies in the US, especially where they are highly dependent. And one or two plants are still under US FDA. So that both these will have a negative supply for the shares at present, and maybe for the short term also. So I would say for pharma companies, Dr. Reddy per se, on the reasonable to expensive valuation range, I would say that upside seems to be very limited. It seems to be capped for Dr. Reddy especially.
All right, that's Dr. Reddy's view. Yesterday's session was marginally lower and trade about 2,556. But let's get into those trading ideas as well. In just a few moments, we'll talk about them with Rahul Randeria as well as Chandan Taparia. But a quick word from you, Yogesh. Yesterday's session, Yes Bank below 80. It's clearly a stock that has, bled out its investors. What would you do?
It was because maybe the reason would be the chaos about the QIP pricing, which has the rumor was at around 86 rupees, but they came out with the clarification that it will be done as on today. So that may have given some unwinding of position due to FNO, not because of any other fundamental side. I would say that asset quality deterioration, if it comes any further, would be a shocking. But otherwise, if it doesn't come, then I think it is reasonable price right now to enter into between 70 to 90 level, I would say. And one should have patience for that. The company is doing enough for whatever they can do. And I would say that the capital infusion would be not a game changer kind of, but at least it will give some kind of a booster in the present sentiment. So I would say around this 75 or 70 rupees odd closing, it would be good enough to get into, at least for the trader as well, and can see up to 15-20% upside.
Okay. Getting in our technical experts, Rahul Randeria, independent market expert, who's joining us right now. Along with him, Chandan Taparia, Motilal, Oswal Securities is also here with us. Start off with you, Rahul. First off on the index. Yesterday's session didn't close below 10,900, bounced back from those levels. But what would you do now?
Good morning, Devina. If you look at the current week, it is in a weekly expiry week, and again it is a truncated week. So hardly there were 3 trading sessions. Purely yesterday's move, I feel that it was purely because of the time decay of the option premium. Yes, definitely the Asian markets and the international markets were weak, but yesterday's market, I thought that it could be an overreaction on the Indian market side, because definitely we have not seen such kind of sell-off which we have seen in the recent past on intraday basis. So definitely at current levels, I feel that could be used as a buying opportunity at the lower levels. For today, I recommend to buy Nifty at current levels for a target of 11,040 on the upside. Downside stop loss should be 11,840. In Bank Nifty, I would recommend to buy at current levels, maybe on if there is a correction of maybe 0.5%, with a stop loss of 27,490. Upside target is around 28,040. Positionally, we are looking out for a larger target from the current levels, maybe 11,400, 11,500 in short to medium term. And in Bank Nifty, we are expecting a target of 29,900. Maybe in the next couple of months, but definitely for intraday basis, I feel that any correction should be used as a buying opportunity.
Okay, Chandan, would you concur? Would you feel that the index can close this gap?
Market yesterday fell down sharply. However, the Reliance and couple of counter were holding, but the broad-based selling was seen. But what I believe that already market has seen the correction of more than 12-24 from higher levels and formed a base near to 10,780, 10,800 zone. So I think some sort of recovery could be there. However, we are just looking for only bounce back move after the recent sharp decline as mechanical indicator turns in last two trading sessions. So again, I'll attempt to buy for a bounce towards 11,050, 11,100. So recommending to go along with the stop loss of 10,850 for a bounce towards 11,050 levels.
Stock ideas then, let's get down to it. Chandan, we keep it with you.
Yeah. So talking about the stocks, I'm having two ideas. First on the buy side, second on the sell side, looking at the market sentiment. First it is buy on Sun Pharma. The stock has formed a positive price pattern on the last trading session. It has given a consolidation breakout, formed a positive price pattern on the daily as well as on the weekly scale, similar to cup and handle, and respecting to its 50-day exponential moving average. And significant jump in the trading volume also support the positive sentiment. So recommending to buy on Sun Pharma with a stop loss of 428, and here we are expecting an up move towards 460 level. Second trade, that is sell on Federal Bank. This stock is continuously making lower top, lower bottom formation. Even on the last trading session, it has broken the multiple support of 86, 87 zone and making lower top, lower bottom with built up of short position. So here we are expecting fresh decline. One can sell on a small bounce with a stop loss of 86, 86 half for the downside target towards 78 levels.
Rahul?
Yeah, I have three buy calls. First is a buy in JSW Steel. Even when we have seen that yesterday there was a carnage across the board, but metal and mining stock were holding on the ground. So definitely there was some sort of supportive action at the lower levels. I would recommend to buy JSW Steel at on dips to 215. Upside positional target is 248 with a stop loss of 204. My second buy call is in Hindalco. One can buy in the range of 176 to 173. Upside positional target 188 with a stop loss of 168. And again, even I am having a buy call in Sun Pharma. After the results, in the last leg of 1 hour, we have seen a spurt in the price, and again it was a breakout. But for today, I would recommend to buy Sun Pharma on dips to maybe 433. Upside positional target 465 with a stop loss of 419.
Okay. One stock that will be in focus today would be Hdfc Life. It will start off lower today. So technically a very strong stock, but an offer for sale which may bring the stock price lower in the session today. Likely, we don't quite know what will happen, but likely bring down the stock price lower today. Chandan, you were bullish on Hdfc Life the last time we spoke, and the stock behaved well. Since that it's come off a bit, might start off slightly lower today. What do the charts or what do the charts suggest there? Do you reckon you can initiate a fresh long if it starts off lower?
Yeah, we are quite positive on Hdfc Life, and we are recommending from last couple of days, couple of weeks, and stock has also done well. So I think any decline because of the activities would be the best opportunity to buy the counter. As of now, we feel that 15 to 20% return cannot be ruled out if 1 or 2 month time horizon is concerned. So I think this decline or volatility can provide the opportunity to grab the Hdfc Life.
You would buy it fundamentally as well. You've been bullish on this. It might start off lower today. You will use that opportunity. Yogesh?
Neeraj, I would say that around this level, 520, 540 odd, it will be almost 3.9 to 4 times price to EV. So I would say I would not be buying at this point, but yes, on the lower level around 420, 440 odd, if it comes, if at all, then I would be a buyer. Though on a fundamental aspect, I remain bullish for this company as 20% growth rate. But on a valuation front at 4 times, it gives some jittery mode and hesitation to go into fresh buy. But yes, around 440, 450, I would be comfortable buying for again crossing all-time highs in a near future. And plus MSCI, we need to see that MSCI changes. This is Hdfc Life is the largest. There is an inflow. So inflow will have today maybe a buyer into MSCI. They would be a good opportunity to get into because it is 3,200 crore worth of deal. So probably further uptick and the buying spree would not come for the later part of the month. Around 440, or I would be a buyer.
Okay, let's see. It might start off slightly lower today because of the technical overhang HDFC Life. Let's see if indeed it gets absorbed very, very quickly in a scenario where the markets aren't looking the best. Mind you, the SGX Nifty is now slipped into the red, a 0.1% lower in the session today. So while the rest of the Asian screen is looking okay, there are certain pain points for our markets, and the SGX Nifty is showing that we may actually not start off well despite the rest of the world looking a happy place. On to our special segment, Bloomberg Edge, wherein Yash Upadhyay tells us about a pattern that the Bloomberg terminal has thrown up on a stock. Yash, what's the stock on your radar today?
Morning, Neeraj. So we're looking at Muthoot Finance, and there is a sell signal coming in on the back of the Trender indicator. Trender, as we know, is a proprietary Bloomberg indicator. It basically uses the average 2 range for the purpose of calculation. How do you interpret it? You go long when the Trender indicator changes its color from red to green, and you go short when the Trender indicator changes its color from green to red. Coming back to the price chart of Muthoot Finance, there was a particular break in the trend, but that did not sustain. I'm talking about the recent one wherein the trender line, which is the one in red color, was taken out a few days back, but that move did not sustain because 650 is clearly a level of high resistance for the stock. Twice, or in fact thrice, it has come to these levels, but has not managed to go up. That was taken out, and with the kind of fall that we saw yesterday, posting its worst single day loss since February of 2018, it wiped out the entire gains from this rally of close to 600. The stock is now exactly quoting at 600, down close to 7.5% in yesterday's day of trade. And with that, the trender has, again flipped its color from green to red, which indicates a continuation of the trend. The false breakout which we saw did not sustain, and at 650 we saw that selling come in, and around the mark of 600 again there could be further weakness coming in. So from here on, it looks like because of the kind of move that we've seen yesterday, there could be some positive slippage on the upside, but a sell on rise kind of a strategy would be advisable when it comes to Muthoot Finance.
How has it worked in the past, Yash?
So Devina, 4 out of the last 6 times that the trender indicator has given a negative call, the stock on an average has gone on to fall over 6%.
Okay, got that. Yash, thanks very much for that. Muthoot Manappuram also in focus, due to what's been happening in Kerala and the floods out there. Though the management have said that, the business is not getting affected too materially. But Yogesh, Muthoot, Manappuram, and also from the standpoint of what gold is currently trading at, how would you look at business for these two players?
Devina, for the gold prices are soaring new high now, $1,535 in the international market. And these Manappuram and Muthoot Finance are in the business where gold, the loan against gold. So they have much more safety in terms of their mortgages. So right now they are into on the cloud 9 as a business. And I would say that for these companies, the way Manappuram has come out with 36% growth rate, growth in the Fed, I would say that will continue for next at least 1 or 2 quarters more, as we see the gold prices are soaring high till the festive season. So till December quarter, I think these companies are in a pure advantage mode and can be looked at on any decline. And even though we have seen 140, 144 as all-time high for Manappuram, currently it is 125 or 120 level. So this price opportunity is still there. And in this kind of NBFC business, these are the companies which are enjoying their margins and the profitability in the last 2 quarters where others are suffering. I would say yes, Manappuram and Muthoot would be a good opportunity to get into further if any correction happens or at current price as well.
All right, and do catch the management of Manappuram Finance. Join in at about 9:50 a.m. this morning. So probably get in more conversations around business and how it's anticipated to move from here. 6 odd minutes left to go for market pre-open. Just want to take a look at some of the other big losers in trade yesterday. BHEL for one slumped 11%. BEML that saw a cut of about 13% in yesterday's session. Motherson Sumi was down 9%. Chandan, Taparia, anything between BHEL and a BEML that you feel can decline further from here?
Yeah, BHEL likely to be under pressure. The stock is continuously making lower top, lower bottom. We have seen significant jump in the open interest activity, which clearly indicates that built up of short position. And the stock is continuously laggard and not seen any recovery even at the time of market recovery as well. So I think now the resistance places near to 55 and the stock can slip towards 43 to 42 kind of level. So I think weakness could continue in BHEL. And talking about the BEL, now it has multiple support near to 90 zone and breaking below the same can take it to 82 kind of level. So weakness could continue, but BHEL showing more weakness with built up of short position.
Okay. The other key newsmakers in the session today from amongst results are Glenmark Pharma. So that stock will likely react to what was arguably a weak number. And then United Breweries was a weak set of numbers too. Gross margins getting impacted, volume growth at 5% versus 6% expectation. So likely having an impact in the session today. Consumption has largely remained stable, the consumption pocket, Yogesh, this quarter. But United Breweries, the numbers, a bit of a miss. Do you expect a major correction here? And if so, will it be bought into?
Neeraj, for UBL, probably the Q1 numbers are tepid because of the volume growth concern ahead of election time. And probably that would have given some kind of a hangover to the profitability at this time. For UBL, again, with the consumption sector, I think United Spirits and UBL both have a strong hold on this. And we have not seen any kind of a slowdown impact in number of sales so far in this many months. This UBL around 1280, 1300 odd, if it comes, then again it will be a good opportunity for getting into the stock for short term. And of course, for the long term, both remains a strong pick for me. And even the way we have seen in Nestle, the company has the product have outperformed the volume growth again back to 2015 number. So similar, I'm not comparing that with the alcohol sector, but yes, UBL would be a good opportunity to get into if there is any severe reaction to the price. Of course, I will be a buyer.
Okay. The other one is future retail. Now, you know, with Reliance doing what it is doing now, yesterday Bloomberg News has reported that Amazon might be in advanced stages or late stages to acquire up to 10% in future retail. It's a very volatile stock. We'll also get a trade perspective out here. But Yogesh, just very quickly, if you look at future retail, if you've looked at it, if indeed this deal goes through, is it a big positive or do you think it'll get priced out very, very soon?
It is just on an infant stage, and if it goes through the 2,000 crore deal via one of the subsidiary company in terms of warrant buying, it would be a great and a very good opportunity for Future Group to expand more. So I would say yes, it is a strong positive for future retail per se.
Okay. Rahul, a quick thought here. Future retail on the charts as well. If it starts off slightly higher today, is there a trade possible?
Yesterday's candle seems to be an inverted hammer with a higher shadow, but the volumes were supportive. So I think that if there is a positive opening, I feel that price could sustain at the higher levels. But definitely at 430, there is a major resistance area. If it crosses above those levels today or maybe tomorrow, then we could see an extension of rally towards the levels of 455, 455. So definitely I would be looking out for the price as well as volume action. If there is a sustained volume at current levels or at the breakout, so definitely there would be an extension of a rally. So definitely I would be looking out for the levels to be broken, and then we'll take a call.
All right. In fact, this news, the first time that it hit the street was sometime in November, when the chatter was that there'll be some close to 2,000 odd crores that would come in, while it's 10% stake from Amazon. And then after that, nothing really materialized, no new additional information that came in, and now once again, the noise gets louder on the street. The other stocks in yesterday's session that did well on the back of results was a Godfrey Phillips. The stock was up, I think, about 13 to 14 odd percent. In today's session, let's see what it does. But Chandan, Taparia, Godfrey Phillips, quickly.
Yeah, we have seen the strong momentum in the counter on last trading session. In fact, on the weekly scale, it has negated its lower top, lower bottom, and exactly taken support near to 675 zone. So I think some sort of more recovery could be there because of the retracement factor and the momentum factor. So I think 910 could be level to achieve for the higher side in the counter.
Okay.
Okay, that's about. So Notes about a few stocks. I mean, it's interesting what Godfrey Phillips or some of the others did, Devina, yesterday. Also, watching out would be HEG because the results come out today after Graphite India's slam dunk yesterday, after which HEG also, I think, cracked about 5%.
Yeah.
If the numbers turn out to be weak, which they arguably could looking at Graphite India, it'll be an interesting stock to monitor.
Yeah, they generally work as a pair.
Yeah.
So, whatever happens to Graphite happens to HEG. So you would wait and watch to see what comes out of its earnings performance. Already ahead of that this year, the stock has plummeted 74% and similar is the case with Graphite India as well. So these are the stocks to watch out for. Jammu and Kashmir Bank, JNK Bank, actually the stock which was up all these days is finally starting to see some profit taking off the table now at about 41 odd rupees after that big spike that you saw just last week or so. Last 7 days, stocks went up about 16 odd %. Back to Asia, just a quick glance before we hit pre-open. So the rest of the market, the rest of the Asian screen looks green, but the SGX Nifty has started to move lower now. So it's into the red by about 8.5 odd points. I think last time we took a check, it was up in the green by 2 points. So, but not a big variation, but it's moved into the red now. Nifty 50 on your screen, the pre-open tick suggests a bigger upside move. So closer to 1.25% right now. Sensex is up about 0.8%. And what happens to Reliance Industries is the big question after that mammoth move in yesterday's trade. The stock today opens up positive, so there is a carry forward from yesterday's positive cues. 2% higher right now in pre-open, closer to 1300. That's where it's facing its resistance nonetheless. So it's trading around those levels in today's session. Yes, banks saw slam dunk yesterday, about 10 odd % today. Recovered a bit, 76 odd rupees is where Yes Bank's trading at. Bajaj Finserv, Bajaj Finance, both the Bajaj twins, both the HDFC twins were key culprits within the bank nifty that dragged the index lower. And in today's session, a big pop of about 5 odd %, at least for Bajaj Finserv right now. HDFC Bank is up about 1.7 odd %, and HDFC Limited too trades okay. Indiabulls Housing Finance, a big pop yesterday, holds on to those gains today, and Z now at about 335. Taking a look at what the currency markets are doing. So again, on the back, what's been happening to the dollar index, and from yesterday's trade on the yuan, which was at about 7.1 to 7.04, there's been some strength in the yuan as well. On the back of that, you're seeing the Indian currency also showing some amount of strength. So from 71.4, 70.92. So almost back to nudging those Friday levels.
Yeah, interesting move today. Let's wait and watch. I think one day and the change that it can bring because remember, the US yields too hardened a bit after correcting the last few days. Gold corrected, crude moved up. So one day change. Let's see if this lasts or no. HDFC Life might be under pressure. Let's see. Glenmark might be under pressure. Let's see. United Breweries is the third one. So 3 large liquid names. You could probably see reactions on all of these. Let's wait and watch how strong and how deep are those reactions. Of course, watch out for the NBFC space. Some positives, but don't quite know how big a positive immediately it is. So you could probably see the smaller NBFCs, the good NBFCs, so Bajaj Finance, M&M Financials, the ones which are getting money might actually have a good draw. Let's wait and watch if that lasts. Last but not the least, just a couple of names which are reacting. Nalco is reacting to its numbers, likely to start off about 5 or 6% lower because the numbers were bad. And you have some reactions in Jindal Poly. Maybe this will change, but for now, showing a downtake. On the other side, Devina, Future Retail, Hathway Cable, all of those stocks which have been in news are doing rather well for themselves. Rain Industries too is up about 14%. Let's give these rates a chance to stabilize. The bond yields very quickly. Let's see what they are doing in the session today. We've hardened considerably the last few days in today's session to about 6.55. So our yields show no sign of coming off. Maybe they won't. I mean, until we hear from the government on what the extent of the
and this is
stimulus
despite yesterday's CPI numbers cooling off.
Yeah. More technical factors at play right now. Let's see what happens to yields going ahead. But let's stick to specific movers in the session today. Firstly, at the large cap end of the market, you'll probably see Dr. Reddy's and Sun Pharma both correct. Let's wait and watch what happens to these stocks going ahead. But Chandan, Taparia, from a trade perspective, is either of these 2 large cap pharma names a short candidate?
No, in fact, we have long recommendation on Sunfair because yesterday's stock has done well with significant jump in the volume. and given a consolidation breakout. So for me, if it opens near to 435, 440 zone, then I can buy with the stop loss of 428. But if it opens much lower, then I'll avoid trade. So for me, I'll better to go with buy strategy here with the expectation that some sort of breakout could be there in the counter after the long consolidation.
Mahindra and Mahindra is the other one that's trading at a 5-year low. So while we obviously know the kind of pain that the rest of the auto industry is also facing, most of the Maruti is trading at a 2.5-year low. Hero MotoCorp is trading, at multiple year lows. But the worst of the lot is M&M, which is at a more than 5-year low right now, at 515 odd. Do you see a meaningful bounce, Rahul Randeria, for an M&M?
Yeah, as you said that the stock has broken the multiple support zone, and again it has broken the levels of 2014's low. But looking at the earlier setup and the larger degree charts, there has been a strong support of 490, where the stock has taken multiple attempts on the monthly charts. I would feel that again, if it drift down to the level of 490, that would be the definitely that would be a right area to enter, at least start accumulate for the long term. Definitely looking at the yesterday's chart, some sort of more downside could be seen, but I would be a buyer around 490 for at least a long-term investment.
That's yet another 5% downside from you. You anticipated to go there though?
Yeah, it might go down because yesterday's candles was weak. So again, the momentum is weak, but if there is a pullback, we can see some sort of selling coming at the higher levels.
Okay, Coal India, that does well on the back of its earnings performance. It's up about 3.5%. So the top mover on the Nifty 50. The top loser is obviously Dr. Reddy's, and we've spoken about that one. IT is a pocket, more mixed bag. So you've got Tech Mahindra, which is in the red, TCS is in the red. But on the other hand, Wipro does okay, about 0.5% higher. And Infi, I think, is up 1% plus. What do you do with IT now, Yogesh? Do you use it as safer haven investing?
IT would be in a safe haven, and I would prefer going into the large cap with the names like Infosys, and even in the semi-large cap would be Tech Mahindra. Though Tech Mahindra post numbers, it has already appreciated from 625 to 680, and now again 640. Then again at 13 times or 12 times PE multiple on the forward earnings basis, and looking at the around $500 million deal they are signing, so overall TCV would be in line with what they have done in the last year. That provides a great comfort. And looking at the scenario where the trade war, if it settles in the next 1 or 2 quarters, then the IT would be a safe haven. Even if it doesn't, I would prefer being into names like Infosys and Tech Mahindra.
Okay, those are some of the large safe names. Do watch out for them. Remember, as we look at the pre-open session, and as the pre-open session looks like settling down, Reliance might start off higher again today. The GDR had inched up another 6%, 5% the day before yesterday, 6% yesterday, that's about 11%. So the mood on Reliance hasn't quite dampened. You could argue that the GDR was playing catch up to the Indian stock because the Indian stock went up 10%, but looks like as the end of first pre-open session, the Reliance stock out here could start off another couple of percentage points higher, and that is important. Now, Chandan, combine the FNO statistics and the technicals and try and tell us, for somebody who is either long Reliance or wants to initiate a fresh trade, what should he or she do?
Yes, Reliance has seen the strong momentum on last trading session. We have seen a built-up of long position and then significant short covering in the counter. Trading volume were quite high compared to last many years or trading sessions. And however, the maximum call open interest or the OI concentration is at 1300 strike. But again, put writing is also there at 1260 strike. So I feel that 1250, 1245 could act as support, while this stock can again attempt to 1300 to 1313 kind of levels.
Okay, well, watch out. Over 1300 and slightly more than that is what Reliance could do if Chandan is to be believed. Let's wait and watch if that stock does that. Coal India, as the pre-open session settles down, is turning out to be one of the better performers. Second to Indiabulls Housing Finance, of course, because Indiabulls Housing Finance eclipsed Reliance also yesterday. It's starting to eclipse Coal India as well today, despite the fact that Coal India was materially, the results looking good, and therefore this move out there. Let's wait and watch if that lasts. Yogesh, did you have a chance to look at Coal India numbers, and do the numbers give you confidence to buy into this company at all?
There are two aspects, Neeraj. The numbers are very much in line with the expectation, though the premium they are fetching on the e-auction, which is just a 2.5 million ton. So that has been a little tepid. But overall, the output is in line with expectation. I would say that the valuation comfort is great here in Coal India, and the profitability numbers, which is growing by around 12 to 13 percentage over YOY. That is also providing a comfort level. Though the negatives are now they're trying to overcome into that. Loss-making minings are getting shut, and they're focusing more on e-auction and the supply from the existing mines. That combined plus around 8 to 9% dividend yield. All this gives a full basket for investment on opportunity. It would not be a stock like from 200 to you will get a 50% kind of a return. It will be a safe return from current levels, and it is available below the IPO price right now. So back to those numbers with the dividend yield, it would be a good opportunity. Those who are looking at a safe and steady returns.
All right, it's actually an interesting exercise to see. In this recent correction, how stocks are trading vis-a-vis their IPO and their listing prices, to see whether or not there is more value in starting to look at them, purely from the fact that you're probably getting it cheaper than its IPO.
Yeah, and from an IPO price perspective, I think it's fairly obvious that it's a lot more realistic than looking at the 52-week high price, because at the IPO price, a lot of people have come in these high subscribed IPOs thinking that there is value there, and if it's available lower, I think Polycab a case in point, probably around that IPO price. There will be a couple of others that we need to focus on as well. Let's wait and watch what happens here. But minutes away from markets open, let's tell you all that you need to know to stay ahead in trade today. First up, NBFC is looking to sell pool assets to public sector banks. We'll have to report positive asset liability management within 3 months of selling such an asset.
ONGC meets estimates in the first quarter as higher oil and gas prices aid bottom line.
Coal India beats estimates in the June quarter with profit rising by more than 20%.
United Breweries, Nalco and Glenmark report earnings below consensus expectations.
Hdfc Life insurance in focus as Standard Life seeks $350 million from a sale of shares. Standard Life has offered Hdfc Life shares at 477 rupees to 493 rupees per share.
In key bulk deals, Amansa Holdings acquires 0.9% equity in Sudarshan Chemical Industries at 325 rupees per share. The stock's trading high about 1.5%.
No, Nalco is the interesting one. That's starting off 8% lower. And before we get in, one top call from Chandan Taparia, just one word on Nalco as well, because the stock is starting off lower. Yogesh, is the pain in the metal stocks in the price? The stocks have corrected quite a bit already, but the results continue to be poor and the stocks continue to grind lower. Would you buy any of the non-nifty metal names?
Neeraj, I would say for metals, the way US trade China war and the commodity, the global slowdown will impact and hammer commodities demand as well. The way auto is slowing down worldwide, my view would be that I would avoid the nifty as well as non-nifty metal stocks in any aspects till at least for next 1 or 2 quarters more.
Okay. Well, maybe a couple of minutes early, but let's take in the top trading call from both our experts first, and then we'll get in one investment idea from Yogesh. Chandan, to you first, your top call for the day today.
Yeah, I'll be with the Federal Bank on selling side. The stock has broken its rising trend line on the weekly scale and making lower top, lower bottom. We have seen built up of short positions, so expecting weakness in the counter, recommending to sell for a downside target towards 78.
Okay. Rahul, what about you? Your top call?
I have buy call in Sun Pharma Advance at current levels, 160. Stop loss should be 154, target 172.
Chandan, we'll leave it at that, Chandan. Thanks so much for taking the time out and joining us today and giving us your perspective. Well, so those are a couple of stocks in focus. But Devina, the result reactions are showing and all those stocks are correcting thick and fast.
Yeah, they are. Actually, I just wanted to talk about Britannia with Yogesh. I mean, the stock's at about 25.50. Yogesh, while we are taking a look at, what's happening within the FMCG basket, this one really, very thinly, it's not a very heavily traded stock, but nonetheless, 3,200 which it traded at just a few months ago, nowhere in sight.
The Britannia has been has seen a sharp reactions from the all-time highs last 8 months, and now again back to 2,500 from 3,600, 3,400 odd. probably the volumes which are now on a declining side and the competition from the ITC group, Sunfeast Biscuits. Though even earlier I was under opinion that the small value pack will have a better better profitability that will drive growth, and the states which are having a low wallet share are going to increase in Rajasthan, Gujarat, MP, everywhere. But somehow they are not managed to cut down on the inflation now. Raw material cost is an inflationary hike, and that could not be passed on to the consumer in last 6-7 months. So that is showing some kind of stagnancy into the profitability. And further, I would say that on the lower growth and the profitability stagnancy, the P multiple has now on a contraction mode. That's why we see some more selling into Britannia names, wherein we don't see that in Hindustan Unilever or the Dabur or the Colgate of the world. So probably this is a phenomenon which is a natural one. Probably it would be again a good opportunity to get into the consumption story again, and the company is in such a future plans that will be bounced back into the positive again into the higher side.
Okay, stay on, gentlemen. Here's how the markets are starting off. Nifty 50, well, surprise, surprise, about 0.75% in the green. So never mind what the SGX was indicating. The start is very positive. The Bank Nifty about 122 odd points. Just when traders would have thought that it was such a bad day yesterday and we'll start off weak, we started off strong. Now this may well happen that we will actually head lower during the course of the day, but for now we've started off well. The mid caps and the small caps should also come up on your screen. Well, not a bad market breadth on open, I must say. 0.8% for the mid-cap space. Small caps about 1/3%. So the market breadth would be positive. I will speak about that. The market breadth arguably positive. Bring up the heat map. On the Nifty 50, the breadth is positive. Dr. Reddy's, as Darshan had stated, down about 5%. So big slam dunk for this one. Aside of that, TCS, Titan, IOC, nothing too much on the large caps. The ones which got pummeled yesterday, the HDFC Twins, Bajaj Finance, etc., are not losing out. Marginally in the green for HDFC Bank, Bajaj Finance certainly in the green, but all of those stocks are doing well. What is doing really well, 3 days on a trot now, arguably the stock of this week as well, is Indiabulls Housing Finance, 6.5% higher for that one again today. We'll take a chart check there. It was just remarkable the way Indiabulls Housing Finance has moved. Z yesterday was up, today about 2.5% higher. There is strength in Tata Steel today. IndusInd Bank is in the green. Bajaj Finserv and Finance are in the green. Reliance another 1.5%. So this one would arguably be the top contributor for now, doing rather well for itself. I'm not seeing HDFC in the top gainers list, the top 10, but not in the top losers list as well. HDFC Bank is now in the red, but that too very, very marginally. Very quickly, a few stocks that I would focus on. Result reactions are 3 names. I'm just quickly wanting to highlight them. Glenmark, United Breweries, Nalco, and all of them start off weak. UBL not so much, but Glenmark and Nalco certainly start off very, very weak. I reckon HDFC Life too would be weak. Let's see whether it is seeing some buying at those lower levels, because otherwise it's a very strong stock. This technical factor might be hurting HDFC Life. It's a stock in focus. Should come up on your screen. 6.5, about 486 and counting. So staying low in trade. Vinita, what are you spotting? Okay. That's the other point. And lastly, I just want to mark a couple of other names. One, the market breadth should come up on your screen, the advanced decline. Let's see what's happening there. And 2, just keep an eye out for Dr. Reddy's and how that stock is doing. It should start off slightly lower today and then maybe should stay lower. Devina, what are you spotting?
All right, so Hathway Cable, we spoke about that one, 14% higher. That's one stock to keep an eye out on. Apollo Hospitals does well today. The stock's up about 6.5% right now. Carrying forward from yesterday's big 13% move is Godfrey Phillips, and that carry is up 5.5% yet again in today's session. Doing well. Lakshmi Vilas Bank saw a 5% move yesterday. Today, carrying forward that positive momentum as well. Den Networks is up. Eros International is up about 5% in the session. You've got Jain Irrigation, Aarti Industries, a few other names that are doing well. Godrej Industries is up about 3.5%. Watch out for what happens to Manappuram and Muthoot Finance as well. Both these counters in focus with what's been happening in Kerala. And this Manappuram Finance is up, and so is Muthoot, closer to 1.5% to 2%. Ashoka Buildcon does well. Yesterday's 2 big losers, BHEL and BEML. Let's see what they're doing in today's session. So BHEL, marginal recovery, and BEML too about 2.5% higher in the session. But Rampur Chini does well. That's up. Piramal Enterprise is up about 2.5%. And then Future Retail and Future Consumer, both of them are up in the session. Amongst the bigger losers, Nalco, Central Bank of India, Glenmark, and then you've got a Mahindra CIE, which are trading lower in the session this morning. So 645 stocks advanced, 420 stocks are trading in the red right now.
Well, a quick opening thoughts. On a trade perspective out here, Rahul Randeria on Indiabulls Housing Finance, another 6 or 7% higher. For somebody who went long earlier, would you recommend booking profits, or is the trend so strong then even though it's a volatile stock, it might be advisable to stay put?
Frankly speaking, at 458, we have recommended a buy, and currently it has just filled the gap of 613. So at the very first take, I would recommend to book profits, because in the last 3 trading sessions, including today, we have seen a sharp vertical rally in a very short span of time, and this has never happened in a recent past. So definitely it is, I would recommend, I would consider it as a short covering move. So one should book profit at current levels. I think stock would go into a time correction, or slightly price could cool off. But again, I would be interested to enter at maybe 550 odd if the price cools down and settle down at those levels.
Yogesh, we spoke about the metals pack. By the way, all those stocks are starting off well, courtesy, I reckon, these trade announcements that have come in. Just one quick thought, Yogesh, on the stocks which corrected a lot yesterday. You know, PVR, Inox on announcement from Reliance in the AGM about maybe the first day, first show otherwise. So there's a steep correction thereof. Would you use these as opportunities to buy, or would you stay away from these companies?
Neeraj, regarding the day before yesterday announcement of Reliance on first day, first show, which may commence from March 2020 or mid 2020 onwards. Probably these are the companies which are trading at a higher valuation, but I am under the opinion that this cannot get implemented, because there are a lot many regulatory things and lot many employment and employment sector needs to be look into this, because it is highly dependent on the job creation that have done wonderfully well in the multiplexes and the malls. This should not happen, and if it happens and the price has corrected, I would say around 1300 odds again from 1900 level PVR would be a good opportunity to get into, because the highest ticket in terms of the gross sales which has happened in this quarter in the history, it is near to the history. So these are a good, and entertainment is the only sector by watching movies and going out with the restaurant for celebration in Indian family and Indian culture. I think PVR would be a good opportunity again to get into, and provided probably one should avoid this noise for the time being, and any such kind of announcement would be a good opportunity to get into the stock again for at least for the longer term period as well.
Okay. I just want a view from you on some of these tire companies, and the news that we've been getting off late about some of them shelving their expansion plans. Obviously, while the pain is evident even in the ancillary space, but even with the push to EV, most of these tire companies, it shouldn't be a material dent to them.
With EV, Devina, yeah, there is no correlation with the tire industry per se. But the demand is not getting improved in tire industry. The replacement demand is not coming up. Everybody's delaying their necessary things, and that's why we have seen some kind of a moderation in the growth for the volume growth, except the MRF, which has shown a good traction in the numbers. But I would say that for the tire industry time being, one should avoid that, because the auto slowdown will have a direct impact on the tire industry as well. In the capex plan, they are planning few companies. They have now put on the shelf, but that will not drive the profitability for at least next 1 year, where we see the slowdown. There is no correlation for EV for sure, yes, but the capex plan on the shelf, I think that will be not viewed as a positive, but viewed as a neutral to negative.
Okay. Yogesh, one top recommendation from your end, something that you are comfortable buying at the current levels?
Sure, Neeraj, but it is a value versus a growth. I would say that I would prefer DMart buying this at the current juncture, though it's on a high P multiple. But the way they come out with the numbers and the expansion plans for 30 more stores in this financial year as well, and the same store growth is now on the stable way. I think that from 900 crore in FY18 to FY19 to now 1500 crores profit in FY21, that gives a strong upside for this company. And brick and mortar strategy is working very well for them. And I would say that yes, the company can grow more from here. So investment, I would a strong buy on that.
Is spotting anything, Rahul?
Yeah, definitely, as we have discussed earlier, that I will be bullish on the metal sector because the trade war has been easing down. I feel that the yuan also would start cooling off. Again, USD INR would be making some sort of a strength from the current levels. Maybe 72 would be the bottom, and again we would see USD INR cooling off from those levels. So definitely in that contest, we could see commodity cycle, means sharp spurt in the commodity prices in the metal segment. So definitely at current levels, I would be recommending buying Hindalco, JSW Steel as well as Tata Steel. At least those who want to invest for next 3 to 4 months, we could see upside rally toward maybe 10 to 15%. And for trading perspective, I am recommending Tata Steel at current levels, which is 361, and maybe on corrections to 355. Stop loss should be 342, and upside I feel that stock can test the levels of 395 odd levels.
Dr. Reddy's is now 7% lower. We spoke about it as to the reasons why, the delay in the launch. Sun Pharma is down 3%. The results may have been good, the commentary wasn't, and therefore Sun Pharma too rightly so is down in the session. These two are the top two losers, Rahul. One amongst them, either one of them, which is good enough for a trade.
Yeah, as we discussed earlier that
but now because the stocks have corrected, so I'm asking you a fresh call at these levels.
Yeah, I would be comfortable going along in Sun Pharma because the chart has not been disrupted or not been deviated from its strength. Dr. Reddy's had broken down the support, so I would be avoiding Dr. Reddy's at current levels. Even shorting at those levels would not be recommended. But yes, definitely Sun Pharma could be bought at current levels for an upside target of 465.
Yogesh, what would you do with aviation, and do you see a trade-off between SpiceJet and Interglobe Aviation?
Since the crude price have now stopped on the downward rally, and then again would be a dampener for as a crude price hike, that would be a dampener for raw material as in aviation. My view would be that upside for aviation sector per se, for at least for Indigo, is very much limited from the current level. And on the technical front also, we can check that 1500, 1550 is the level where it gets the sell-off, the selling impact is coming. I would avoid at this juncture, and would be a good opportunity for short keeping their stop losses intact, the traders' stop losses. I would avoid getting into aviation on the long side right now.
Okay. Yogesh, we'll leave it at that. Thanks much for taking the time out and being with us and giving us your perspective. Appreciate your time. Just one quick word. All the metal stocks are doing well. JSPL has results today, so please be careful there. And Vodafone Idea is the other one, which is up 4% today, maybe a dead cat bounce. So just be mindful of Vodafone Idea as well in the session today. Glenmark Pharma 7% lower, Nalco 6% lower. Mahindra CI about 3.5% lower. So some of the stocks are looking slightly wobbly in trade. Rahul Randeria, take a moment to thank you as well for joining on the show today and giving us your thoughts. Tell you what, let's slip into a quick break on that note. We'll come back from the break and we will talk about some of the key results. Of course, talk to the management of Bharat Forge. Then, of course, we'll touch base with Vinita Bali at 9:35 to talk about what's happening within the consumption space, and then speak to Manappuram Finance as well about what's happening. So 2 or 3 interesting conversations that are lined up for you on Indian Open. Stay tuned to the show.